I get this question from clients quite often. So I decided to provide the answer here in this video library of answers to frequently asked questions about the infinite banking concept and the tax-free cash growth warehouse strategy. The question is, do I have to continue to pay premiums forever? Or does the policy pay for itself at some point? Aloha, I'm Stan Cox, Principal Broker and Strategist with the SC Finance Strategies and Insurance Consultants. I'm also the author of the books on the tax-free cash growth warehouse strategy, and I am the Managing Director of Hawaii Financial Free Thinkers Academy, a nonprofit financial literacy education organization. For the past several years, I've focused on and specialized in the infinite banking concept and the tax-free cash growth warehouse finance strategy. The tax-free cash growth warehouse strategy requires that the account used for the strategy be designed in a very specific and special way. And the design we use happens to offer the greatest number of options in every instance. To begin with, let me say that there are account designs that only require premiums to be paid for 10 years, 12 years, 15 years, or until the owner insured reaches age 65. There's even a single pay option, but that one automatically becomes a modified endowment contract, or MEC, and that's no good at all for infinite banking or the tax-free cash growth warehouse strategy, because with a MEC, you forfeit the tax-free cash growth benefit. We don't want that. So obviously, with all those designs I just mentioned, no, you don't have to pay forever. With the design that we use for this special finance strategy, it is set up for the premiums to continue up until the insured's age is 100. And I guess you would say forever. But as I mentioned, that allows for the greatest number of options moving forward. You see, for the tax-free cash growth warehouse strategy, we want to generate as much immediate cash value as possible. We also want to generate the greatest amount of tax-free cash growth as possible, as quickly as possible. In order to do that, we construct the account with the smallest amount of whole life insurance as we can. Then we build onto that special riders that contribute to our goals for the account in a number of ways. First, those riders have their own premiums. So the total premium for the account includes the premiums for the whole life portion and the premiums for the riders. The riders we use for this special account are remarkable in that while they increase the total face value of the account, the premiums paid for those riders also contribute to the immediate cash value of the account, and then the growth of the cash value by means of dividend interest. And though the face value continues to increase, the premiums do not increase. Another thing those riders do is to raise the MEC limit for the account so that you can load in more to the cash value in any 1 year than you would be able to without the riders, and not lose the tax-free growth benefit. Now, back to the question of having to pay premiums forever. Because these policies are receiving dividend interest paid into the cash value of the account, and at the same time are buying more total death benefit, and the dividend interest is compounding, eventually the dividend interest will be enough to pay the total premiums for the account on an annual basis. At that point, you would have the option to redirect the dividend interest to do that, pay the premiums for you. That way, you won't need to continue paying into the account. Because the account is built on whole life, the riders can be reduced or eliminated altogether, without terminating the policy. By reducing or eliminating one or more of the riders, that would also reduce the amount of premium required. So in that case, the premium would still need to be paid, but it would be considerably less than what it was with all the riders at full value. And again, eventually the dividend interest would be enough per year to cover the remaining premium. And you could direct it to do that. So you would no longer need to pay into the policy. And it would continue in force and growing, both in face value and cash value. Finally, there is the reduced paid up option, or RPU. With this RPU option, we can reduce the total policy benefit value to what has already been paid for in full. At that point, there would be no more premiums to be paid, and the policy would continue in force and continue to grow cash value and in benefit value from the new value that it is reduced to. Let me give you an example here, make it a little bit easier to understand. If the original total benefit of the policy was $1 million and the premium was $20,000 per year, after paying the premium for 10 years, you have about $600,000 of life insurance completely paid for. At that point, your account would have about $250,000 or more in cash value, and the face value would have grown to about 1.6 million. A reduced paid up option at this point would then reduce your policy death benefit to the $600,000 value that it has been completely paid for, and your premium requirement would be zero going forward, and you would still have the $600,000 of life insurance, and the $250,000 in cash value would continue to grow with the compounding dividend interest, along with the policy face value. Then in another 10 years, your policy would be back up to about $1 million or more, and your cash value would be up in the $400,000 range or so. So do you have to keep paying premiums forever? No. Of course, anytime you can surrender the policy and take whatever cash value it's built up and terminate the policy. But there are other options available where you can cut the premiums and continue the life insurance and the tax-free cash growth warehouse as your own personal financing source. Now, if you found this to be helpful, please like this video and subscribe to this channel. Also, please post your questions and comments here. For a more complete explanation of the tax-free cash growth warehouse strategy, you can watch our free 60-minute webinar. The link is in the description box below here. The link to buy my books on Amazon.com, also in the description box below here. And if you'd like to book a free phone consultation with me, the link to my Calendly page is also below. If you'd like to apply to become a client of ours, that link to the application is also below here. We're here to help, and we look forward to helping you. Aloha and mahalo for watching.